query, but this time with Trideep, because this seems like a little broader question that is coming in from Girish Sharma, who's asking on the quarterly earnings. But I'll look at this more from a broader perspective of the tailwinds that we have for India. Now, we've seen good macros for India, which is helping us. We are expecting those rate cuts to come from the US as well. We have auto data that will come trickling in today, and most experts are expecting a double-digit growth even in the two-wheeler segments that was, kind of slowing down all this while and not seeing that rural recovery at least. But things are turning around. So this Girish, in fact, is asking whether, this is this sufficient to really support the current market scenario, or will we have to see some change in valuations? And what's your take on how the stock market and even specific stocks are valued at this point? Or is it better to wait for some more liquidity?
Great question, I would say. And I would say something like this, that the market will be a little, from an earnings standpoint, a bit two-paced in nature. The manufacturing side of the market will actually come out in flying colors. If you look at the order wins that have come about, not only on defense, but broadly speaking, mostly from the government, infrastructure, and even from the private sector standpoint, the order booking has been pretty decent. PMI numbers have been pretty decent. And hence the numbers coming out of manufacturing-led companies would also be probably pretty decent. But on the other side, if you look at the consumption-oriented companies, I think they might report a little bit of lack of festive cheer, if I may say so, on a broad-based basis, and hence earnings might be a little tepid as compared to expectations. While on the domestic front, this would be the scenario. The export-oriented sectors will actually kind of just about wash their face, in the sense that this is not supposed to be a meaningful quarter in the grand scheme of things, but they will just about be broadly in line. So on net balance, I think expect a fairly, in the near term, two-paced nature in the market, wherein we would think that stock picking or how one picks the sectors would be the key to outperformance going forward.
Right. Now, speaking of sectors, banks are the ones that didn't really perform that well, or, were among the underperformers if you look at a couple of those big banking names. But then we saw that turnaround happen in December, and we're hoping that financials will be the one that will outperform in 2024. But also, we're seeing that change happen in IT stocks. So if you have to look broadly sector-wise, Trideep, what would be the themes to be playing out? You did mention export-oriented and all, but I'm talking about specific sectors and those, indexes which will really be pushing the benchmarks forward. Which ones would that be for you?
Understood. And again, I would take the year at the same time, as opposed to taking a quarter. And I would say that while I talked about from a macro standpoint, the year of transitions, from on net balance, the read-through from the macro is that we are likely to have a fairly noisy macro coming about. And hence, focusing on sectors where they have earnings tailwinds is the way to go about it. And the places that I see earnings tailwind comes through in the 2024 are actually five, in my opinion. First, I would point to CapEx as a theme. With capacity utilization of India Inc. as fairly high, I would reckon that India is very close to the start and onset of a private sector-driven CapEx cycle. Most likely this will happen on the other side of the elections, but this has a time scale of probably kind of 2 to 3 years ahead of us. And hence, that's one area which is related to industrials, cap codes, infrastructure, where I would suspect earnings are likely to be resilient. The second area that I would point to is actually the point you alluded to, financials, and more specifically lending financials, and within that NBFCs. I would say that with rates peaking and starting to come down, NBFCs would be one area which would see the light of the day, given that they benefit disproportionately as rates come down overall. This is the second area that I would point to. The third area I would talk about is power. And I'm talking about with regards to electricity and the sectors which are allied onto that. I think that overall, with very little investments that we've seen in this segment over the last 10 years, we are headed into a power deficit sort of a situation over the next 2 to 3 years. And hence, various elements of the power chain, which kind of feed off on the power deficit, I have supernormal earnings on the back of this, would actually stand to benefit. This could be very well power generation companies, distribution companies, utilities, and many others who are kind of linked to power and benefit from a power deficit. That would be the third area that I would point to. The fourth area that I would talk about is real estate. In my opinion, in India, real estate is in the middle of a 5 to 7 year upcycle, wherein the first 2 to 3 years are gone. We have a good base of earnings from that coming through, and the reason why this looks resilient is housing unsold inventory are broadly at about 10 to 12 year low. When such a thing happens, usually with a little bit of demand uptick, you see good amount of sales come through, which is what we are seeing from builders. But this time around, even the ancillary sectors would actually stand to benefit. So net-net, real estate could be a strong area of earnings as well. And finally, I would point to IT services as the dark horse of the year, in the sense that it might start with very fairly tepid numbers in the quarterlies that is expected, but through the course of the year, as we see global growth rates bottom out, I would expect IT services to gradually bottom out, and over a period of time in 2025, we would see stronger growth rates come through. So, Stacey, those would be the five sectors and areas where I would think in 2024 earnings are likely to be resilient, and hence a good place to be from investment standpoint.
Right. So earnings will be resilient, but those five sectors that Trideep mentioned, quite interesting there, because we're seeing a lot of activity in that power and infra space as well. And financials, like I said, of course, we're looking at IT to be that dark horse. But thanks so much, Trideep Bhattacharya from Edelweiss AMC, for giving us your time and speaking with us and getting our viewers up to speed with what they need to be looking out for in 2024. But let's get some more